Hi, I'm Tom Diamond. I'm Head of Property at TC Group.
Hello, I'm Kieran Aldershaw, Associate Director in the Property team at TC Group.
We're going to talk to you today about a number of important things to help you run your commercial property more efficiently.
Let's begin with business rates relief. Business rates are a tax that is applied to all UK property, and it's similar to council tax but is only applied to non-domestic properties. All commercial properties in the UK have a rateable value. This is set by a central government agency called the Valuation Office Agency. Rateable values can be found on the government website, voa.gov.uk. So the business rates paid by businesses across the UK will be collected and used for a number of services. These can range from transport infrastructure, local safety and policing, and roads and other kind of maintenance. Typically, business rates are assessed on a 5-yearly basis within a business rates period. The current period is 3 years due to an extension the previous period due to COVID. This is running from the 1st of April 2023 until the 31st of March 2026. So the most commonly used form of valuation for business rates is the comparable method. This is a method of valuation where properties are assessed based on recent evidence of similar properties. So another form of valuation is the profits method. This looks at the profits generated from an asset and assesses the value based on this. So the contractors method is another form of valuation used for properties that are difficult to value. This can be where there's a lack of evidence in the market, and so this will be based on a cost-based approach using the rebuild value of the property minus depreciation and the land value. So business rates bills are raised by local government, so this will be the local authorities. They will send out business rates bills based on the rateable value applied by the VOA. The final rates bill is calculated applying multipliers to the rateable value. This will depend on the size of your premises, so whether you're a small operator or a standard operator, and different multipliers are applied. So the rates bill could be subject to various reliefs. There are a number of reliefs that are available to UK properties, and we'll go into this further. So there's a common form of rateable relief that can be applied, which is called small business rates relief. This applies to any property under a threshold of £15,000 of a rateable value. So there is a relief available for the not-for-profit sector. This is called charitable relief. There is a relief applied up to 80% of the rateable value, and then the local authority will also have a discretionary power to bump this up to 100% if they choose to do so. There is also a very generous relief currently available for retail, leisure and hospitality sector. This currently stands at 75% of the total rateable value that can be applied, and this will be changing in the next year, moving down to 40%. So there's also empty rates relief. This is a relief that's applied to unoccupied properties. So if a business moves out of a property, they will potentially be able to claim up to 6 months relief if they're an industrial unit, and up to 3 months relief in any other UK property. So business rates payers may also be able to claim temporary relief, depending on changes in the environment, such as major roadworks that might be affecting accessibility to their business. So the local authority will also have discretionary powers to apply reliefs. This will be based on a case-by-case basis and depending on the business and the property involved. So if you think there might be an error or your bill is overvalued, you have the ability to go through the VOA via a challenge appeal process. This is where a business or their appointed agent can challenge the value that's been applied, depending on various factors. So the commercial property team at TC Group can help to reduce your rates bill by initially offering a free consultation. This will give us the opportunity to review your business rates position. We will then be able to identify any opportunities to make reductions or savings on your current bill. So recently we were able to assist a business within the retail and leisure sector as a company contacted us operating out of Skegness. They operated a number of arcades in the area and were unsure if they were paying the correct business rates bill. We were able to review their position and understand that they were eligible for the retail, hospitality and leisure relief, which they currently weren't receiving. We then contacted the local authority, ensured that this was applied and managed to secure a refund of in excess of £130,000 for the business.
Another way to make valuable tax savings from your property is through capital allowances. Capital allowances are a valuable tax relief claimable by owners or occupiers of commercial property in the UK. The benefits of capital allowances are a reduction in your corporation or income tax bills. The process works by one of our specialist surveyors carrying out a detailed survey of your property. We'll be looking for items of plant and machinery on which we can claim capital allowances. Once we've assessed the value of the capital allowances, we work with our tax team to calculate the tax benefits. The annual investment allowance is available to all corporation taxpayers in the UK and allows them to expense up to 100% of the capital allowances up to a certain limit. After the annual investment allowance has been extinguished, or if it doesn't apply, writing down allowances applied to various items of plant and machinery on which you can claim capital allowances, written down on a year-on-year basis at different rates depending on the pool. Structures and buildings allowances are also available on most commercial properties and relate to capital allowances related to the structure of the building. Capital allowances can apply to an apportionment of the purchase price of a commercial property or a detailed analysis of major refurbishments or expenditure to property. Items that are claimable include air conditioning, electrical systems, heating, lighting, sanitary ware, security systems, and other items of plant and machinery. We recently carried out a project for one of our clients in the hotel sector. They carried out a significant refurbishment of their hotel property. We analysed the expenditure on the project and qualified in circa £1.5 million worth of capital allowances, which resulted in a tax benefit to the client of around £350,000. We recently worked with a client who has a portfolio of industrial properties across the country, had never reviewed their capital allowances position previously. They had several properties built or purchased over the past 30 years. We analysed the properties and identified capital allowances of approximately £1.5 million. The client secured an initial cash benefit, refund of around £50,000 and total project benefits around £250,000. We can also support with outstanding lease expiries, lease renewals and rent reviews. Most clients of ours occupy their commercial property on a leasehold basis. Typical life cycle of a lease involves various elements. On the way in, both parties need to negotiate the key terms. During the lease, there are rent reviews, break options, alterations may be required, disputes may occur. At the end of a lease, the tenant may want to renew, they may wish to leave. Both of those things will need managing. When negotiating a new lease, the key terms to consider are the length of the lease, the rent payable, and any incentives that you can negotiate. Repairing liability is an important consideration. Is the tenant going to be responsible for repairing and maintaining the building, or is this going to be the responsibility of the landlord? Terms for disposing of the lease are also important to consider. If the tenant wishes to get out of the lease mid-term, what are the options available to them? Can they assign the lease? Can they sublet it? Break options are an important consideration. These govern the terms on which the tenant can exit the lease during the term. Rent reviews are an important consideration. There are various options to consider. Are they open market rent reviews? Are they index linked? Can the landlord instigate it, or can the tenant proactively deal with them? We always recommend taking a proactive approach to lease expiries, whether acting for the landlord or the tenant. The earlier you can get into discussion with the other side, the more options you have to explore. We recently carried out an interesting rent review project for one of our clients, a national business that occupies property all over the UK. We were dealing with a rent review on an industrial building in Bristol. The rent passing was around £150,000 a year. The landlord was seeking to put this up to around £300,000 a year. We carried out a site visit, analysed the market, and then got involved in some detailed negotiations, ending up with a really positive settlement around about £200,000 on the rent. Day Lewis are one of our most important clients. We act on their behalf dealing with lease renewals and rent reviews across their pharmacy portfolio, dealing with properties all over the UK. Typically we deal with around 40 to 50 rent reviews and lease renewals for them on an average year. For more information, please get in touch for a free consultation.
Thank you for listening.